Good afternoon. This is Oliver Slow Blue Line Futures. It is Friday, February 21st. Hard to believe that we are approaching the last week of the month. It seems like January was 3 months and we got about 3 days in the month of February. But here we are, and I'm joined by my colleague Dan White, who joined us last year. He's the head of our research department at Blue Line Futures and Blue Creek Capital Management. He does a lot of heavy lifting on that end. So he's a great resource here. If you guys ever have any questions, feel free to reach out to him. He'll be happy to help you. Dan, what a little bit of a busy afternoon in those outside markets to round out the week.
It's been nuts. I mean, 2025 has been a volatile period, but this past couple weeks have definitely been interesting. We're just seeing a lot of interesting shifts between the dollar strength, gold, precious metals, and then the equity markets. It's kind of an interesting time right now. So it's Friday when we're recording this. We just caught a late afternoon sell-off in equities, and we could probably dive into that later. But yes, crazy times and very interesting times in the grains and livestock for you.
Yeah, the markets have been moving, which is great. At the end of last year, it seemed like we were at a point in time where it was almost like watching paint dry. That has since shifted, and corn doing a lot of the heavy lifting to start the year. We've been kind of in the camp that corn seems a little bit frothy, and maybe some of these other grain markets can start to pick up the slack. But just kind of zooming out, and looking at the week, it was kind of a ho hum week. March options expiration for the grain markets probably kept things in check a little bit. So not a whole lot of action on that. And then over on livestock, we had a cattle on feed report this afternoon. Fairly neutral, not a whole lot of change
Okay.
really through the week on price action there. The big market mover in the livestock side was lean hogs. That April contract down about 492 for the week. Cattle, little changed on that end.
Yeah, I'm seeing not a whole lot of moves in the livestock. I mean, what's your take on cattle? I know you've been fairly bearish. Are you still sticking to that thesis, or what's going on in your mind there?
Yeah, I'm kind of going back and forth. The funds had been pretty aggressively long, really across the board. When you look at live cattle, feeder cattle, and lean hogs, all record net long positions. That alone isn't necessarily a good enough reason to step in front of a freight train. There was good fundamental catalyst. The bulls got some nice tailwinds with the Mexico-U.S. border closing down for screwworm in the fall, but that narrative has shifted a little bit. That
Right.
border since reopened, we saw the cash market soften up, and you've started to see some long liquidation. Now the big question is, are we at a point where we start to see that long liquidation feed on itself like we saw at the end of 2023, 2024? The charts are at some really important inflection points. So I think we'll have a pretty good indication of what this market wants to do here once we turn the calendar over into March.
Fun times, and the data on. Because I'm new to cattle, to the listeners out there, so I'm trying to learn all I can from Oliver. Now, our imports from Mexico with the border reopening, have we seen import flows? Does that come to fruition?
The cattle have started to move. There's a little bit more of a process in place right now, so it's not really up to the speed that it was. But cattle are moving. There was a report of screwworm found in Mexico over last weekend, and the fact that it was found in Mexico, I think, is a good thing. It means the processes that are in place are working that didn't get into the United States. What would be a big problem is if that was picked up in the United States, then they'd
Right.
probably have to go back, look at what processes they have in place, put that on pause until they can figure it out. So the fact that that was found in Mexico, I think, was a relatively encouraging thing. So it'd be interesting to see. The
Interesting.
cattle markets are a fun one. It's a thinly traded market relative to a lot of the other ones, so there's always
Right.
something exciting. But speaking of exciting, those precious metals, I know that you've been trading those pretty actively, keeping an eye on them. What are you seeing there?
Yeah, uh, today you get a risk-off move in equities, and precious metals stay weak. So there's kind of it's a tough environment to manage across multi-asset classes because you're starting to see precious metals and equities move in tandem, where you're not getting the risk off flows necessarily into gold and silver. Um, Gold, we've been very bullish on, especially in the CTA. Silver, we've been bullish. Relative to gold, it has not shown as much strength. And platinum and palladium, those are heavily tied to auto manufacturing, and those have been, uh, significantly weaker than gold and silver. But we're staying bullish. But this risk off move here to end the week has definitely given us a little bit of a pause, especially on our bullish equity outlook. Um, there has been a trend because we got services PMI and manufacturing PMIs this morning, and there's been a trend with services PMI slowing and equity sell-offs happening. So that's kind of what I've been diving into this afternoon is, is this equity sell-off warranted essentially, where does the equity market deserve to trade at a little bit of a compressed multiple to where it's been at? Because the growth in earnings is starting to slow down for some of these big tech guys. So I know that's a tangent. We started with gold, silver, but I'm all over the place this afternoon with all the moves. But yeah, precious metals have been interesting. Crude is another one where I, that big rally that we had, you know, 2 months ago, we were on
Mhm.
that. But this last move upwards, I've definitely been neutral, more hands off. Um, that caught a pretty significant sell off today. It's something I need to dive into more. But Crude is another one that's whipping around like crazy with all the headlines. So
Yeah, well, you had done a good job keeping me at bay of getting bearish on crude oil. I know after the election when Trump won and coming into office, a lot of people saying drill baby drill is going to be pretty darn bearish for oil. But you brought up the great point of the spare capacity to really get that up to speed and
right.
what you're going to do with it. So yeah, I like crude oil. Obviously, a big down day today, down about two and a
It's
quarter bucks here at the close, 3%, but still mostly range bound, holding that $70 level.
I would like to see it establish a range. So yeah, the bear thesis on crude end of 2024 into 2025, it was kind of twofold, right? It was the drill baby drill out of Trump, and then the forward looking balance sheets for 2025 were showing a significant surplus, almost like a record. I think it was the IEA had the 2025 balance sheet running pretty close to a record surplus. Um, so forward looking, it was very bearish, but in the immediate terms, global inventories of crude oil, even with demand being weak out of China, have been running at 5 to 10 year seasonal lows. So the supply is currently tight, but everybody's been very worried about, OPEC ramping production and the surplus coming online. Now, this week, OPEC, there's been a lot of speculation that OPEC is once again going to delay these output hikes.
Right.
Those are scheduled for April. If those do officially get delayed with the increased pressure Trump's putting on Iran, these markets are going to probably stay tight through 2025. Um, that helps offset the latest bearish catalyst, which has been progression in a Russian Ukraine ceasefire. So, Trump, he really wants to get a deal done with Russia, Ukraine, get this ended. That to me, even if you get that headline, that would be a fairly bearish, crude oil catalyst. Now, even if we get a ceasefire, it doesn't mean that Russian barrels are going to come online immediately. But to me, that headline of a ceasefire being signed kind of has given me pause to really get long once again. But these OPEC delays do happen. I'm probably going to be a perma bull for the rest of the year. So you're going to have to grab me by the collar at some point.
Yeah. Well, I think you talking about the headlines and the push and pull and the bullishness and the bearishness. I think it just kind of reemphasizes the new environment that we're in commodities. It's a trader's paradise, really, and it's really tough to sit with core positions for an extended period of time because you're just getting whipsaw back and forth. So in my mind, working with clients, it's really important to try to capitalize on movement. If you want to keep a core position,
It's
great,
it's tough.
but you're going to want to capitalize on some of that in between movement and the jockeying back and forth.
Absolutely. Me and Bill had a conversation about this kind of when we started moving into this environment where, as a trader portfolio manager, to me, in this environment where you have so much headline risk that's seemingly random, right? You kind of don't know which way you're going to be whipsawed. Our shift has been to focus more tactically, where you can bring down sizing and you kind of shorten up your time frames and you stay nimble. So when you get these headline knee jerk moves, you're on your front foot and you can play offense, right?
Right.
It's a terrible situation. It's not a terrible situation, but every trader knows, how crappy it is when you get a knee jerk headline reaction that if they had no position on, they would be either buying or selling hand over fist.
Right.
But because they had too big of a core position, they're forced to manage risk and not be opportunistic. So I
Yeah.
would, in my opinion, I think being taking down size, being tactical, more shorter term, and kind of like you said, monetizing the moves when you get them, and then attacking these knee jerk reactions to me is a good trading strategy in this environment. I mean, what are you kind of seeing?
Yeah, no, I agree with that 100%. And honestly, the CME group has done a really good job at offering different contract sizes for a lot of different markets, which has not only, lowered the barrier of entry for retail traders, but it also made position sizing a lot more manageable for professional portfolio managers,
Absolutely.
especially when the volatility is heightened. You aren't, beholden to 1,000 barrel crude oil contract or
Right.
100 ounces of gold. There's different sizes there that can help mitigate that risk. So you talked about kind of tactical setups. Is there anything on your radar going into next week?
Next week. So, I mean, when we were preparing for this, my tactical trade for next week kind of got blown out of the water. What I liked was, S&P options. I really liked the at the money straddle heading into next week. We have a slew of earnings. And to me, that vol in March seemed a little bit underpriced. That somewhat got blown out of the water here with this last move, but I still think traders should take a look at, you know, going to March. It's a little bit expensive, but those at the money straddles, when I was pricing it out, it's like a 3% move over 28 days. It's pricing in like 80 bips a day. You got a scalp to pay for that.
Yeah.
To me, in this environment, it seems opportunistic when you're sitting at a pretty key support line for S&P. So I would say tactically some S&P vol, but I'm not feeling as great about it after this move and vol spiked. So what about you? What's a tactical trade you got for next week?
Well, you probably heard me talking about it in the office over the last couple of days. It's those commodity currencies, and when I say that, I'm primarily looking at the Canadian and Aussie dollar, both of which had been in a pretty significant downtrend, really through the fourth quarter of last year. But it started to turn a corner with some capitulation on February 3rd, which seemed to have maybe not cemented a bottom, but at least put in a short term bottom. And we've seen the market work quite a bit higher in both those currencies here as of late. So for the Aussie specifically, the next hurdle to really get out above is that 64.50 level, which is a 100-day moving average, along with previously important price points dating back to last November and December. So if we're able to get out above there, I wouldn't be surprised to see that Aussie dollar make a push at that 50% retracement, which is just a fancy way of saying the middle of the trading range from those
Right.
September highs to February lows. So I like the Aussie dollar, gave back some ground here today, but I'm still looking for potential upside movement if we can get out above the 100-day in that market.
You're far more prepared for this than I am because I love that thesis. I'm looking at it. I'm very jealous. That's an interesting one. Um, and, if China does come back online with a little bit of growth,
Which
which we're starting to see,
there's signs of it, right? I mean,
right.
there's some
You're,
good signs out there.
you're seeing their equity market turn around, and there's a lot of speculation it's tied to tech and whatever. But I just think jarring loose some positive sentiment in that Chinese economy. I really like to see that. And if their consumer and some of their manufacturing can hop back online, I mean, the Aussie is a great play for that in my mind. So I'm jealous of that thesis. You win this round. Um,
Well, you could tag along in that one, all right?
yeah, exactly. We might put that on. And then did you say the CAD?
The Canadian dollar, yeah, yeah, had a nice little move to the upside as well. You know,
How's
obviously,
that chart look? Can you pull that up? I
yeah,
haven't looked.
it looks halfway decent. Yeah, we're bumping right up against similar levels than the Aussie dollar. Really back to those December lows where we really just rolled out of bed, middle of December. That's now resistance. We weren't able to get over that here in the last week or so. But if we're able to get out above that, which comes in right around 71, I think you could start to see that momentum continue to the upside. So I like both of those currencies. A little bit of a contrarian play because they have been in a downtrend, but it looks like they're forming a
Yeah,
bottom. And from a risk reward perspective, when the currencies stop going lower, you'll look for a little bit of a retracement to the upside. So
right, right. It's a lot of these currencies, they've just been so beaten down, and a big reason is just the strength of US interest rates, right? Where
right.
our rates are just, I mean, the US Treasury bond's one of the best deals in town, especially when you're looking at equity markets trading at, fairly high multiples relative to their historical averages. But yeah, the CAD is an interesting one. I'd have to take a look at that more in depth, but I love the Aussie. And then I got a core trade for you that you're gonna like,
All
maybe.
right, spit it out.
Maybe. All right. So this is one you can sit on for a while. Me and Matt were hitting on this last week. December cotton 70.
Oh,
Yeah, we're gonna go back and we're gonna sit on it. We're gonna get the USDA Feb outlook for them. I think that's a big bull catalyst for cotton. I mean, with how that price has been beaten down, the economics, they can't favor planting cotton into this season, right?
Yeah, I was actually going to bring up cotton as a potential flyer out there. I was looking
Oh,
a
I'm
little
going core with it, baby. I love it.
I was looking shorter term. I mean, anytime you get cotton mid 60s, that's what I would consider a value zone. Sure, it can always go lower, but historically, the risk is fairly well defined. Now, it is cotton, so it can be volatile, and the margin requirements are actually pretty high for cotton. So I like
Okay.
looking at the options market there. It's been in a dungeon basically below 70, but if we can get out above 70, I think this market can boogie. And back to your point, if we start to see some green shoots out of China, I think there's some potential there. Then here in the United States, you've got to incentivize the farmers to plant cotton at some
Right.
point, and I don't think you're going to do it at these levels. So I like the upside there. I like looking at the options market to give yourself some staying power without all that margin risk.
Right. Yeah. And going back to December, this is a type of trade. So I priced out the 70, 75. I got to double check that this is correct. But, 136 is at 680 per unit. Kind of one of those trades where you go back, you put it on, and then just almost take it off
Forget
your
about
risk
it
analyzer.
almost. Yeah.
Just kind of put it on and forget about it. I like when you go back, that far Z25 to put on some of these directional positions. I always trade those better if I just put it on and just forget about it. I don't know about you, but that's how I would treat this trade.
Yeah, I like that trade as well, especially when you're looking at the options. You know what your risk is. You know where your upside potential is. So you got that laid out, especially with that much time as well. It's not going to be something that you're going to be watching every single day and every single tick.
Right.
It's a long term position on that front. So I like that. I like that for sure.
And then, it's not my core thesis around it, but the US is a decent sized exporter of cotton. And as Trump goes to make deals with all these countries, it could be something, it's a tool to try and boost those exports a little bit. I don't know, but it's a flyer.
I agree. I agree. All right. Let's see. Any hot takes, unpopular opinions this week?
Um, kind of. So I'm looking for a resurgence in performance out of some of the industrial metals. I'm looking for an aluminum rally, and I think palladium and platinum may have some upside here. Kind of a hot take, but I'm starting to see manufacturing PMIs and some of the data turn around a little bit. The manufacturing sector has been in a decline, according to the data, since I believe first quarter of 2021. That can't be right. It has to be 2022. But it's been a significantly long downturn in the manufacturing sector. And I'm starting to play for a turnaround in that space and attacking the metals. Uh, it's a hot take, so don't come at me. I'm
Well, I hope you're right, because I've been a precious metals bug for a while. Gold is obviously
you don't say.
grossly outperformed silver, but if your thesis comes true, I'd imagine that have some spillover effect into the silver market as well, which is really just kind of found itself between a rock and a hard place between being an industrial metal and precious metal.
Right. And its industrial uses are largely tied to a lot of the new energy stuff and the growth in new energy manufacturing between solar and batteries and all that stuff. The growth there was coming from China, right?
Right.
So again, a China resurgence would be phenomenal for those. And then I got a second hot take that I know you and a lot of your awesome clients aren't going to like, but I almost have to take this side just to be the villain.
All
Corn planting figures.
right. 100 million.
I just want to go for 100 just because I want to be that guy. That's my hot take, is that we get close to 100. And
I mean,
then
it really, it doesn't seem all that far fetched. I've been hearing similar conversations out there. It's certainly a lofty number, but I mean, with
I
where
mean
prices are and other commodities, it's not out of the question.
I
Certainly.
mean realistically, where do you think we come in at
That's $1 million question.
to start?
I
Like March planning figure, gun to
it's
your head, what are you thinking?
it's going to be high, but which is part of the reason why I'm a little bit more bullish on some of these other grain markets and think corn could come back in a little bit, because I think you've got to see soybeans try to buy some acres and cotton buy
Right.
some acres and kind of bring that into balance. And I don't think we're quite there yet, so that's why we've been fairly bullish on corn for the better part of the last 2 or 3 months. But as prices continue to go up, you remove some of that value from that play, and I think you see other value in soybeans and wheat, especially relative to those spreads versus corn and the ratios versus corn. I think there's opportunity there. So
Yeah. It's
that's a long tangent that doesn't answer your question.
that's all right. That's beautiful. I've been going on tangents. So the corn, this rally in corn, what's interesting, and I don't know if I read this right. I mean, the corn prompt spreads, like the front month spreads in the cash markets, they're not really signaling strength to me when I look at it, right? I mean, where are you at on that? Because I think a lot of the spec length is tied to old crop, new crop spreads,
Yeah.
which is maybe part of a bearish play on new crop D's corn, and the specs might just let that front month long just roll to expiry.
Yeah,
It's
yeah.
just
I think that's where a lot of the length is as well. Again, my optimism with every uptick we get in corn is starting to dwindle more and more. Uh, so I don't know that there may. I mean, sure, we can continue higher over time, but I think we're going to need a new catalyst to really propel the market meaningfully higher from these levels. And
right.
I don't know what that would be right now, outside of a potential weather scare in the U.S. or South America. So.
Right, especially with Brazil. I mean, their last planning progress figure, they largely kind of caught up to a reasonable pace, right?
Yeah, they caught up to a reasonable pace, and then you saw conditions in Argentina for corn and beans improve 2 to 3% after some beneficial rain. So that kind of at least puts the some of the bullish tailwinds at ease for the time being. So yeah, a
Right.
lot going on out there. Certainly was an exciting week this week. Next week, I'm sure will be just as exciting, if not more, with it being the end of the month. Which again, that's crazy to say. So. I think that covers it, unless you've got anything else you wanted to touch on.
No, no, no. You got any hot takes? I didn't ask you back. What's your hot
It's
take?
No, my hot take was just gonna be, I like cotton to the upside from a risk reward standpoint.
All
I
right.
like the precious metals, but I can only say that so so many times without sounding too redundant. So, yeah, I guess we'll try to continue this segment each and every Friday. We appreciate you
Yeah.
guys for tuning in. Again, you have any questions at all? We've got a great team. Myself, Dan is obviously, as you can hear and see, an excellent resource. So whether you're a client or looking to be a client, don't hesitate to reach out. Remember, trading futures and options does involve substantial risk and is not suitable for all investors. Thank you. Have a great weekend.
Thanks, guys.